Hello.
Hi.
Have you ever thought about going into space, Richard?
I'd love to go to space. I can think of nothing nicer. In fact, I think I'll go someday.
Virgin Galactic went public near the end of 2019, and since then, investors have been sent on a ride which has been nearly as exhilarating as a ride on Virgin Galactic's very own VSS Unity. With all these extreme ups and downs, it's clear that the market does not know how to value this company. After all, there is no company quite like Virgin Galactic. However, that's not going to stop us from trying to calculate the true growth potential of Virgin Galactic. But first, a brief history of the company. If you're already an expert on everything Virgin Galactic and just want to get to our calculations, go to the timestamp on screen to where Nathan breaks down the numbers. If not, you can stay with me. In 2005, Richard Branson through Virgin Group and Burt Rutan through Scaled Composites founded the Spaceship Company. At the time, Virgin owned 70% and Scaled Composites owned 30%. But when Scaled Composites was bought by Northrop Grumman, the Virgin Group ended up purchasing the remainder of the Spaceship Company to make it a subsidiary of the Virgin Galactic we know today. The VSS, or Virgin Spaceship System, works by having a carrier aircraft carry the spaceship to 50,000 feet and then detaching it. The spaceship is then powered into a suborbital trajectory by a unique hybrid rocket motor, which combines the simplicity of a solid-fueled rocket motor with the controllability of a liquid-fueled one. The mirror-like surface of the spacecraft reflects its surroundings as it travels beyond the thinnest parts of the atmosphere, giving its passengers a full 5 minutes of weightlessness. Mr. Branson originally expected commercial flights to begin by 2008, but development of the rocket plane was much slower and more difficult than initially planned. The company had 603 reservations on its books, with tickets going for $250,000 per person. But Virgin Galactic froze ticket sales after a crash in 2014 tragically killed a pilot during a test flight. It was later discovered that the crash was due to a pilot error, and newer VSS spacecraft come with systems in place to ensure that such an error cannot be made on future flights. When ticket sales resumed, the price was up to $450,000 per flight. We can take this as a good sign, as it indicates that Virgin Galactic is being forced to raise the price of their services after receiving higher than expected demand. In the middle of 2022, Virgin Galactic is planning one more test flight to verify the upgrades and then will begin commercial operations. They hope to increase the pace of their flights with additional space planes coming into service. Now, Virgin Galactic is not the only corporation pursuing suborbital spacecraft for tourism. Blue Origin is also competing for domination of the suborbital space tourism market as well with their New Shepard rocket. However, competing may not be the right word to use, because if the development pace of New Shepard, or any of Blue Origin's projects, is a testament to their competitive prowess, then they do not pose a significant threat to Virgin Galactic. Virgin Galactic is currently working on their next generation spaceplane called VSS Imagine. This spacecraft, the first in the Spaceship 3 series, will be made of stainless steel. It is less mass efficient than aluminum, but it is cost effective and highly heat resistant during re-entry. Moving towards stainless steel is a larger trend in the space industry right now, as it has been adopted with the development of SpaceX's Starship. Stainless steel should help Virgin Galactic with their spaceship production costs as they begin scaling, and they estimate that the costs will be between $35 and $55 million per vessel. So hopefully now you're a little bit wiser on Virgin Galactic as a company. Now I'll turn it over to Nathan so he can run through the calculations of Virgin Galactic's true growth potential.
So, now that you have a better idea of Virgin Galactic as a company, hopefully you will also have a better understanding of the assumptions we'll have to make in order to try and calculate their growth potential. So, the thing about Virgin Galactic is, unless we see a change in leadership from Blue Origin, the size of the suborbital space tourism industry is purely a function of Virgin Galactic's own ambition. So, that is where our calculations will have to start. Fortunately, we are not completely lost here, as we do have some information as to how ambitious Virgin Galactic is. The company's CEO, Michael Kohlglazer, announced that he sees the company bringing up to $1 billion in annual revenue per spaceport in the years ahead. We also currently know of plans for 6 spaceports globally. Of course, we have Spaceport America, but Virgin Galactic also has plans to operate in Abu Dhabi, Italy, the United Kingdom, Australia, and Sweden. So if Virgin Galactic has 6 spaceports, each bringing in $1 billion in annual revenue, we can expect a total annual revenue of $6 billion as their current target once they hit maturity. Now we need to assign them a profit margin. due to the fact that they are selling an exotic experience to the global 1% combined with the fact that they have no serious competition, as of right now, we're going to assign them a profit margin of 30%. This is higher than other non-software or consulting services, but not unreasonably so. On screen are the profit margins of some other industries for reference. So, $6 billion in revenue with a 30% profit margin gives them $1.8 billion in earnings at the end of the day. Now comes the price-to-earnings ratio. We can assume that a company as innovative and exciting as Virgin Galactic will have a high price-to-earnings ratio at the end of the day. But in order to ensure that our calculations aren't inaccurate, we'll go with a range. On the lower end, we can expect them to have a price-to-earnings ratio of 40. This is just a bit above the average price-to-earnings ratio of the S&P 500 index. With $1.8 billion in earnings, a PE of 40 would give them a $72 billion valuation. Now, for the upper end of this range, we'll go with a price-to-earnings ratio of 100. Yes, there are companies that have price-to-earnings ratios higher than 100, but the main reason those companies are trading so richly is because people are speculating on future growth. But we are trying to calculate how Virgin Galactic will trade once it is closer to full maturity. So, for the upper end of this range, a PE of 100 would give them a $180 billion valuation. Now, in order to complete the picture, we need a time frame. Since it is impossible to predict the future and see exactly how fast Virgin Galactic will reach maturity, we also need a range for this. On the lower end, we'll say that Virgin Galactic can reach maturity in 10 years. This is what we see as the upper end of what Virgin Galactic could be capable of without using an eye-watering amount of leverage. And then the more conservative side of this range would be assuming that they can't reach maturity for 15 years. Now, we are able to combine these numbers to get our predicted compound annual growth rate. On the absolute lower end of our spectrum, assuming a $72 billion valuation in 15 years, we get a CAGR of 17%. And on the upper end of this range, assuming a $180 billion valuation in 10 years, we get a CAGR of 39%. Yes, I know this range is wide, but that simply comes as a result of the fact that we cannot see this far into the future with accuracy. If anyone says that they can predict Virgin Galactic's growth over this timescale to a greater degree of accuracy than this, you should seriously question the reliability of their projection. You can always take a value between these two extremes and say that you expect Virgin Galactic to grow roughly 28% over the next 10 years. However, keep in mind that that number has a very large plus or minus. And when we say 28%, note that this video is solely focused on the growth potential of Virgin Galactic and does not factor in the risks associated with holding this stock. And also, the reason we decided to show you every number we plugged into our calculations was so that you can amend them if you agree with just one or two of our values. Say, for example, if you disagree with the 30% profit margin, you think it should be higher or lower, you can simply plug it into the equation we used and come up with your own projection that you may use to power your investments. One other thing to note about this projection is that it does not factor in the potential of Virgin Galactic to enter the supersonic transoceanic transportation business. This is something that Virgin Galactic has expressed some interest in, but we don't have anything tangible to factor into our growth calculations. If Virgin Galactic enters this venture in the future, we will have to redo our calculations. It will likely mean that the market cap of the company at maturity could be much higher, but we could also be looking at a much longer time frame. Anyway, that's the best we're currently able to do with the information we have on Virgin Galactic. If we receive game-changing information about the company, these calculations will be updated. Thank you so much for watching, and I will see you guys in the next one. Peace.
So now that the school year started, I have a lot of new things on my plate. I'm taking hard classes like Physics 15A, which is one of the harder classes Harvard has to offer, and I'm trying out new clubs, like, for example, Harvard Crimson, which is our student newspaper. So if you don't see me in as many videos, that's why. Don't worry, I have not fallen off the face of the earth. I'm right here, I'm just a little bit more busy than usual. I'm sure you guys will miss me very much, but I will be back in the future. Bye!